Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 6th of July. Starting off with something of a laugh of honour. We like to indulge ourselves now and again. That comes in the form of AorTech International, where the view was that break of 45p, which was this converging triangle in place since November, could lead us to the top of this rising trend channel from the end of last year as high as 80p, and we hit that earlier today, which is very pleasant. Maybe at this stage, probably wait and see how the stock regroups. It'll be interesting to see whether we can hold above that old 65 pence resistance. Indeed, at the moment, if you're a fan of the shares, probably be looking to buy on any dips towards that 65 pence level. Stock which is flared up today after flaring up just at the beginning of the month is ECR Minerals. We had that vertical move there, which was through the 50-day moving average, typical, a little bit of a shuffle there, and then the second part of that move, looking for an end-of-day close above the 200-day moving average at 1.01 pence over the next few sessions. The target here, the best case target here, while we're above the 50-day average at 0.78, is as high as 1.6 pence over the next month or so, which is the top of a broadening triangle from October. Next up, a stock which I haven't actually looked at before here on the Bulletin Board Heroes, but here is the debut. Strange chart, but I prepared it earlier, and basically it's a buy on a technical buy on the basis that we're looking at a falling wedge breakout from April. Very strange, but that the implication is that while we remain above that resistance line, which is around the 5.25 pence area, the initial target is the 50-day average at 7.36 pence. After that, we will take a view. Presumably, May resistance towards 9 pence on the way down would be a reasonable target to go for, given the way that we've escaped this falling wedge quite strongly now. Stock which I think covered a long time ago, but looks like it's back in business for the bulls. Mila Resources. I like this just on the basis. Well, I don't like it on the basis that there's not much, clearly not much volume here, but there is at least the pattern that you have that final selling climax, vertical move through the 50-day and 200-day moving averages, then a shuffle, and then it looks as though we've got a new leg to the upside coming in now, just after that bear trap below the 50-day line, and a retest, implied retest of the 5 pence area. But that was just something I noticed today. On to Ncondezi. If we get the right epic code there, Ncondezi Energy. Here we've had a perky stock. I've highlighted it before. It's taken a bit longer maybe than one would have liked or expected, but the overall progression here is within a wide rising trend channel from the beginning of last year. Obviously, the initial resistance zone is, or target zone is 10 pence, but the big target here could be towards 16 or 18 pence over the next 2 to 3 months. And that would be valid as long as there's no break back below the recent 6 pence support zone. Ideally, there's no break back even below the 50-day average at 7.43 pence. The company I interviewed yesterday and seemed to feel the benefit of that fundamental input from the CEO, Edward Dawson, is Prospex Oil and Gas. We were looking for the shares to break and hold above the 50-day moving average at 0.44, which they managed to do yesterday, and they've made further progress today. Target here remains towards 0.6 pence, the top of a broadening triangle from March. Going on to a stock which has given some of its fans a bit of a hard time in terms of the fundamental mix, but we had a gap higher yesterday at Serica Energy. That gap remains in place, which is decent inside day today, but while we hold above that gap around the 60 pence level, one would be looking for a fresh leg to the upside, and the logical target area would be towards 75, which is the bottom of the May gap. If you're cautious on the stock, we wait for a break above the 50-day moving average at 66 pence currently. That's obviously going to fall over the next few days. Going on to a stock which is another falling wedge pattern, highlighted a couple of days ago, anticipating that the stock could break to the upside. 18 pence is that resistance line there on the falling wedge formation for Tekcapital. A decent end of day close or end of week close today could then open up the stock for a move towards 25 to 30 pence, which obviously that was 30 pence the resistance on the way down in November. At this stage, we'd ideally like to see the shares remain above the April support around 15 pence. Finishing off with one of the stocks at the moment, UKOG, UK Oil and Gas, and here the shares trying to find support of what was formerly resistance around the 1.8 to 2 pence area on the way down, and right in the middle of that range at the moment. If we fall much below 1.8, there's a risk, I suppose, of a move back towards the 50-day average at 1.47. So if you are a fan of the stock, maybe be cautious in terms of that scenario. Otherwise, maybe the easiest thing to do here is to wait for a break of yesterday's high around 2.2 pence before being able to sort of targeting the 3 pence area again over the following 2 to 4 weeks. That's it from me. More updates on Monday.